You are listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, the 30th of July, 2018. We see the market ended the week with the S&P 500 and the Qs down on Friday. We're going to talk about the candles themselves. They're up candles, but we saw on Friday TLT 20-year bonds and gold were up. Now, don't forget our book, Charting Your Way to Wealth, is for sale. If you want to support us here at the channel, want to know more about what we do here, our two primary methods of looking for trades and entry points, how we use the indicators that we use and what they mean for us, along with the Heikin-Ashi candlesticks, please make sure to purchase our book. There are links at our website, under our daily market reviews, at our YouTube channel, and of course, if you subscribe to our daily market reviews for free, just go to the channel and sign up. You'll see links there in the show notes. Thank you so much for your support, and we appreciate everyone who has purchased the book. We're going to be doing, of course, a special training for all of you book purchasers in the new month, and it is going to be on our Bitcoin chart. We've done some training on that in the past, and we're going to give you the latest. So please go ahead, buy the book. Everyone who's already purchased the book, you'll be on that list too. And of course, those of you who purchased the book by halfway through July, we of course put out on the 15th our short chart trading. We've gotten lots of good feedback from you on that. And if you'd like more of that, we'll work on doing more of that for you also. So let's jump into these charts. We see the week ended on the S&P 500 with the third up week, even though there were a couple of down days during the week. Overall, our Heikin-Ashi candlestick is up. It is the smallest in the last 3 weeks. Derivative oscillator heading up, price percent oscillator heading up. As we go from the weekly to the 2-day, we see that the 2-day is actually a red open box candle, which again is not a strong red down candle, but it does show some halting in movement, and that is the latest 2-day candle. The price movement is laying right there on the 2-day trend line. The weekly price movement is still above both the 2-day and the weekly chart. We see the price percent oscillators pretty much flat, derivative oscillator losing energy, and we look at the 4-hour chart, and of course we see that there was some down movement in the morning on Friday, and then strong down movement in the afternoon. We saw that in particular, a great deal of down movement in the afternoon on Friday. And again, we watched the price percent oscillator flip over into the negative. Derivative oscillator's not gone negative yet, so we'll continue to keep our eye on things and just see what's happening and where things are going. If you had jumped into that up move, then of course that strong down movement in the afternoon was kicking you out. Just again, continue to watch. If we see things rotate back over and head back up, that will be a good springboard for potentially an up play there. So again, watch and wait. So far, things are looking decent in continued up movements. Now we go from the S&P 500 to the Qs. What we see on the Qs is a little bit of a different story. On that weekly chart, we see not a green up candle, but a red spinning top with price movement actually going below the weekly trend line, well below the 2-day trend line. Derivative oscillator losing momentum, price percent oscillator heading down. That's on the weekly chart. We go from the weekly to the 2-day, and of course we see that as a solid red down candle pushing through the 2-day trend line, still above the weekly. Price percent oscillator heading down, derivative oscillator losing momentum. Don't have a crossover going down yet, but again, a good bit of a pullback for that latest 2-day candle. What we see on the 4-hour chart is we saw things start to tick over, heading down back on the morning of the 26th, and then again on the morning of the 27th on Friday, and then a big down move in the afternoon, going right down there through the 2-day trend line on the 4-hour chart, right there above the weekly trend line. So again, lots of strong down movement in the Qs. Keep your powder dry, and let's just see where things are going there. Maybe there'll be some good news as far as the tech stocks go, and we'll have a turnaround next week. We're still poised to make some up moves if things turn around on the 4-hour chart, but unless we get that signal, We are not going to be doing that. So keep your eye on the prize on that 4-hour chart, both on the S&P 500 and the Qs for potential up plays if that comes about. Be ready for that. If not, if things continue to move down, then of course we're probably not going to have a down play over the course of the next week, because we need the 2-day and the weekly to both be moving in that down direction, and that'll take some strong down movement to make that happen. Hopefully we won't have a systemic market crash, but we will be standing by, watching and seeing, and being ready to follow the trends. Remember, we are not forecasters, we are trend followers. That's the way the smart money moves. Okay, TLT, we go to 20-year bonds. What do we see there? We see 20-year bonds are up for the day, 0.17% on Friday, but it was a strong down week for bonds. Derivative oscillators been losing energy over the last 2 weeks now. Price percent oscillator headed down. On our weekly chart, we go from the weekly to the 2-day. And of course, this latest 2-day is actually a green up candle with price movement sitting right there on the down 2-day trend line. So we do have a green candle, but the derivative oscillator is gaining downward momentum. Price percent oscillator heading down. And we go from the 2-day to the 4-hour. And what do we see there? Sideways slide. So we'll continue to watch things, if indeed over the course of this next week, as stocks do poorly, if bonds move inverse to them, as they do a lot, what we will be looking for is if stocks continue to do badly, perhaps bonds will move back up. We're going to have that 2-day rotate back over going up, and then we can follow the market up if indeed that does occur. Hasn't happened yet, just a sideways slide, but perhaps that direction is changing as the derivative oscillator loses downward momentum and the price percent oscillator is heading up. So keep your eye on bonds over the course of this next week. We might have a play for an up move on them. And lastly, gold up for the day, 0.05%. Now again, still a red down candle. Gold is still trending heavily down over the last many weeks. We've only had 3 up weeks throughout the time period from the time gold really started moving down on the 27th of April until now. Derivative oscillator gaining downward momentum, price percent oscillator heading down. We go from the weekly to the 2-day. What do we see? We see price movement below the 2-day trend line, well below the weekly trend line. We do see that the derivative oscillator is losing downward momentum. Price percent oscillator is pretty much flat. And what do we see on this 4-hour chart? Well, 4-hour chart has been in a pullback since the 23rd. We're wondering, waiting, and watching to see if it's going to rotate back over going down. The derivative oscillator is losing upward momentum. Price percent oscillator is pretty much flat. If we do see that 4-hour chart rotate over going down, then of course we might have an inverse play in gold that is shorting gold. And that's where we end the week. You have questions, problems, concerns, we love to hear from you. Want to know more about our book? Please check out all the information on all of our show notes. We're happy to share that with you. We'd appreciate your support of the channel. And again, questions, problems, concerns, you can always write us chartingwealth1@gmail.com. God bless from the whole team here at Charting Wealth World Headquarters.